Joan Dromey. I'm the Senior Product Manager for the Private Markets Group at Computershare. I don't know how many of you know anything about Computershare, so I'm going to assume not much. We're a fairly sizable company, but my little crowd, and we are sort of a crowd, we are a startup within the company because about 3 years ago, Computershare decided that it would be a good idea to look into expanding into the private market. We're primarily known for looking after the books and records of publicly held companies, which we do a lot of. So let's talk a little bit about fueling your growth through the capital markets. For those of you thinking of doing this, this is not for the faint of heart. There are a lot more options open to you now thanks to the Jobs Act, but it is still something that takes a lot of work, and what I find from my experience so far in working in this space is a lot of issuers understand their business, but they don't know a whole lot about securities offerings. So you need good lawyers, like Mr. Corrin here, and Mr. Hallmeyer, and Marty Tate, and people like that that have been through these wars, because you will need help sifting out what you need to do and what's the right fit for your company. I have a friend that does a lot of marketing in the Regulation A+ space, and he always says that Regulation A+ is not something you choose, it chooses you, based on whether it is in fact right for you. It's not right for everybody. And that's true for almost any structure that you might look at. And I know Scott mentioned earlier that this is a highly regulated industry. It most certainly is. Just because you're doing securities that are not registered under the Securities Act of 1933 by no means means that regulators aren't looking at you and examining you every step of the way, because I assure you they are. You are raising capital under an exemption of one shape, form, or another. So raising that capital means that you have to provide your name, rank, and serial number and how much capital you're going to raise and how you're going to do it. And believe me, the regulators will look at how you're doing it. We haven't seen a lot of enforcement yet, and the SEC has actually been extraordinarily kind and forthcoming to most of the issuers that are filing under these exemptions. They're pretty forthcoming and actually explanatory about their comments, which is not the norm for SEC comments. A lot of times, if you are doing an IPO and you file your documents, you'll get back, we don't like this, 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 and this, and they won't tell you why. It's up to you, and it's up to you to pay your lawyer to figure it out, basically. But on this, they've been a bit more forthcoming and helpful, which is good, because I think everyone wants this legislation to work. It is a big and major piece of legislation. It's a sweeping change in the securities rules, especially around solicitation, and it's working. It's not perfect, as you can tell by Fix Crowdfund Act, but it is working, and a lot of companies are raising capital that wouldn't otherwise have been able to, and they're doing it at a lesser expense. When we first looked at getting into this space, I was asked to do an analysis of whether it was a good place to do business. And I think this is a tremendous market, because if you look at all the regulatory restrictions that public companies come under, like Dodd-Frank and Gramm-Leach-Bliley, things like that, Sarbanes-Oxley, the SEC itself says the average cost of compliance for a public company for that kind of stuff is $3.4 million a year, every year. That's just a burden that most small companies cannot sustain. So this was a very necessary thing. There's a lot of things to be concerned about when you go into this space. Raising outside equity, taking money from what I like to call FFF, friends, family, and fools, puts you under certain obligations. And it means that you have to communicate with your investors. You have to be transparent in letting them know what they own, how you're doing. There's a balancing act between remaining in control of your company, if that's what you desire, being responsive to your investor and or employee needs. Lots of companies that do this type of thing have employee equity and options grants going on, as well as raising outside equity. So there's a lot of record keeping involved. Now, we do the unglamorous part of things. That's how I like to refer to it. Computershare is primarily a record keeper. That's our core business. That's all we do. We don't raise money. We don't sell investments. We don't really do the subscription offerings, as Scott described, that Invest Now button and all that wonderful stuff leading up to having investors. We do things from that point forward. The way that I like to explain this to people that are issuing securities is usually I find in my particular end of things, not with a big public company like ExxonMobil or AT&T, there you're dealing with investor relations folks. In my end of things, you're usually dealing with the CEO or the founder, maybe the CFO if the company's gotten to that stage in its growth. And usually those are the lucky people that have been keeping the records, and it's probably not the foremost thing on their to-do list. So the records aren't always in great shape, and they're not always immediately up to date. And they're not always in digital form. Sometimes they're spreadsheets and sticky notes and all kinds of other fun things. I've seen shoeboxes come through the door as records. And I've seen spreadsheets come in that have strike through 8 lines out of 100. Oh, what's this? Well, those certificates aren't good anymore. Well, do you want to know what happened to them and keep those records? Because we kind of need those details if you do. Most people who are keeping the records want to keep up with it, but they have other more urgent calls on what they do, which is why it makes sense to outsource it to a professional transfer agent or an independent record keeper of some sort. Because it's confidential information, you're not going to hand it over to the shipping clerk to look after. But if you're the CEO or the founder, you probably don't have really the means or the desire to keep up with it. So, what is a stock transfer agent, and what do they actually do? We keep the information about your investors, their personal information. We do tax reporting. We keep the records of who owns the stock or maybe other securities. We're very agnostic. We take all comers. We have LLCs, we have REITs, we have C Corps, we have S Corps, we have LPs, we have MLPs, we have everybody. And we have all different types of securities ranging from debentures to preferred stock to, we have companies that are on, they're raising their Class A or they might even be on round G. Lots of companies are remaining private longer these days and raise more rounds of capital. The more rounds of capital you raise on different terms, the more important it is that you get this stuff into digital format and in a place where it can be tracked and transparent and made available to people. We replace lost certificates because, as Scott said, it's more common these days to issue book entry statements rather than physical certificates, but one of the things I try and warn companies about when they come to us early enough is make sure you're offering documents. Take care of that sort of thing. Make sure your bylaws and articles of incorporation mention that you will support book entry and don't leave you on the hook forcing you to issue paper certificates. I've had 2 clients that have had to because their bylaws said that they would issue paper certificates because nobody paid attention to that, and that's what was in the memorandum. And once you say it and it's in your disclosure documents, you're stuck with it until you can have an annual meeting and change your bylaws and make that amendment. So it's important, especially if companies, sometimes they're trying to cut corners on the legal fees. So if you're downloading documents from LegalZoom, let me just tell you that lawyers never throw anything out. And so the memorandum might be written in such a way to put you on the hook for physical certificates. So be very careful about that. We can handle new share issuances. We can replace lost certificates. The most important core thing that we do is make sure that transfers are processed legally. A lot of securities that you issue under exemption are subject to restrictions of various kinds. Restrictions are one of those pain-in-the-butt things, but they're important to make sure that you're not violating any securities laws. So if you're issuing Reg D securities, chances are they're restricted for at least a period of 1 year from the date of the closing of your offering. So that's another thing that people like to be able to see what's going on with that, whether the shares are restricted and when the restrictions come off. Those are things that are visible in our web portals. We also handle payments, new share issuances. We can administer direct stock purchase plans or dividend reinvestment. And we provide tax certification online and tax reporting services. And we make sure that, because we do a lot of this, we make sure that we're keeping up with the latest and greatest. I can tell you that the FATCA changes were not all that much fun to implement, but they're all in all our systems and they're embedded in what we do. Okay, let's see. Who's Computershare? Well, we're a pretty sizable company, actually. The company's based in Australia. We operate in about 20 countries. We have about a $5.5 billion market cap on the Australian Stock Exchange. And we manage a whole lot of records for a whole lot of people. Of the 6,000 clients that we have worldwide, about 3,000 are here in the U.S. Over 1,000 of those are micro-cap and privately held companies. And we manage here in the U.S. about 18 million investor records of various sizes, shapes, and description. What do? We basically, as I said, look after the records, and I know that sounds kind of boring, but it's important, and it's important to do it right, and it's important to do it in a compliant manner. We mitigate the risks that you might be running if you're trying to do transfers yourself and you don't know all of the state-by-state rules, and you don't know who can transfer what, and you don't know whether this restriction should be lifted or not, or what the procedure is to do that. We do all those fun things. And we also basically, we have a lot of technology. A lot of technology investment goes into all this, and so we are able to give you a lot of tools. We support valuation for privately held securities, so we can take in a price from the issuer, give it an as-of date and an explanation that will let the investor know how the valuation was arrived at. Some of our clients simply declare a net asset value, and that's something that's done at a board of directors meeting, so their explanation might just say the net asset value of Class A stock is $9.82 a share as declared by the board on such and such a date. Some companies hire an independent business valuation company. So there's a variety of needs there, and basically our services support you giving the information. It goes through to all our web applications. It carries through onto the statement so people can get a statement of value for their holdings. And that's important for people who might be pledging stock as collateral or looking to somehow arrive at a statement of their assets. We have cap table waterfall modeling, dual class transfers. We have a sizable number of companies these days where the stock can convert from one class to another, and it's something that can actually be done online. We have dedicated relationship managers that work with the clients, so when people come in, they get a relationship manager assigned, and that's their kind of liaison to the wonderful world of things that we do. That's the point of contact for the client. And we find that that works pretty well because they know the internal workings and who to go to get things done if the client's having a corporate action or something like, or an annual meeting. But it gives the client the same person to talk to all the time, which helps. We offer a board portal, an advisor portal for broker-dealers and registered investment advisors, stock option and restricted stock administration. Lots of security around what we do. As I said, we invest a lot in our technology, and we are very, very conscious of data security. We have to pass audits from a lot of the public companies. We have to have SAS 70 certification. We get audited by people like AT&T and Prudential, Metropolitan Life. Those are some of our public clients, so they are under certain restrictions, and they come in and examine what we do to make sure that the quality is good. So we've been able to leverage that to deliver our services at a cost-effective price for privately held companies. We have an issuer portal that allows the client to go in and take a look at their information. You can see the cap table, you can see all the investor records, run all kinds of reports, more reports than I would have thought possible that anyone would need, but you'd be surprised. We're always coming up with new ones. Somebody always wants something new and different. We have the ability to tag whether an investor is accredited or not, if that's something that's important to track. So there's a lot of different types of client-managed tags that you can put on the accounts. And the investors have access. In the investor website, because we manage books and records for a lot of different companies, what you'll find is the typical investor probably owns anywhere between 2 and 5 investments that we manage the records for, so they'll see a portfolio view of any investments that we keep the records for. So they'll see their privately held securities alongside Walmart or Federal Express or whoever that might be. And then within that portal, they have the ability to get statements if we're producing the 1099s, or for a lot of the privately held companies, there's about 100 where we do the distribution of the K-1s once they're prepared by the accounting firm. So that's something we can load into our system and distribute to the investors, and then they can just download it from online. Let's see. Issuer solutions. We have a lot of flexibility. We have a lot of clients, so we do a lot of different things for different people. It's rare for something to come along that we haven't done it for somebody at some point in time. So we offer international currency support, market order sales for book entry shares, limit order sales for book entry shares. We have a quick cert product that if a company has to issue certificates, it's a less expensive means of doing it than bank certificates. Let's see, annual meetings, waiver plans, asset reunification. We have an event management tool. We do a lot of different types of corporate events, tender offers, Dutch auctions, mergers, acquisitions, preferred conversions, lots of fun stuff. Let's see. We also take a lot of people through the public offering if they get to that point. Now, I know Regulation A+ offers the mini IPO. We find a lot of private companies do a regular IPO at some point too, and we've done a bunch of them. And I can tell you, Facebook is my poster child for why private companies should get a transfer agent. It took a year to straighten out their record keeping before they could go public. It was a pile of stuff that needed to be sorted through, because at the point when you flip to an IPO, people get very protective of what they think they own. And it's important to have accurate records and make sure that when you do that conversion over, that it's on point and it's true, because somebody will sue you if it's not. Because if I owned some of Facebook and I thought I should have had 1,000 shares and you're telling me I only have 100, I'd probably chase after that, I think. I think most people would. Okay. Does anybody have questions? Yes.
This company Snap is issuing a public share that they do not have any right to vote. They have only financial interest in the company.
Yes, that's correct.
Question, because we cannot hear.
Snap, which is the parent company of Snapchat, is doing an IPO where the shares that will be issued have no voting rights. That's a means of maintaining control of your company. Facebook has done a certain amount of that type of thing too, and that's how Mark Zuckerberg has retained a lot of control over Facebook. I mean, the SEC has, I believe, approved their offering document. So it's not illegal to do that, and Brian's probably in a much better position to give an opinion on that than I am.
On that basis, if the issuer raising capital through Title 2 or 3, does the shareholder will have any only financial interest in the entity, or they will?
If those are the terms of the offering and that's disclosed, then that's something that you know going into it. That's what you're buying. Some people would potentially not buy an investment if they don't have a shareholder vote. I mean, I've seen a fair amount of situations where companies structure the voting rights. They'll have cumulative rights for, like, in essence, the preferred class will control the company because they have 10-to-1 voting rights over the common. I think the approach that Snap has taken is a little unusual in that there are no voting rights rather than that kind of 10-to-1, or I've seen 20-to-1 actually, so that the preferred can easily outvote the common and essentially control the company. That's pretty much how Facebook did it. So that's something that I think that's a big focus for a lot of entrepreneurs. When you raise outside capital, to some degree, you're giving up a percentage of your company, and usually you're giving up a certain measure of control. It's certainly true if you have angel investors or VCs, because when people plunk down their money, they usually want to say in what's going on. And that's not an unfair expectation. It's just one of those things that if you're the entrepreneur, and I've been on that side of the fence, then you have to decide what's more important to you. And if you want to grow your company faster and you think you can do that by taking in the outside money, it's a trade-off.
But Joan, my view is that the equity crowdfunding is not only democratizing a financial industry, it is also saying that shareholder, you have only interest in a financial interest. Let the entrepreneur, the founder, build the company the way they want to build it. They don't want activate investor to interfere in the process.
Well, I don't think that all offerings are done on that basis. Not all crowdfunding offerings operate that way. Plenty of them have one-for-one rights for the shareholder. It just depends on the individual offering. Yeah?
Can you talk a little bit to when a company or client should be engaged, start being engaged with as far as an offering?
I've seen a lot of variation in that. I would say that the biggest piece of advice is don't let it go too late. Like if you're doing a CF offering or a Regulation A+ offering, you could literally have thousands of investors or hundreds. At that point, you should be engaging and outsource to keep your records. A lot of companies do it sooner, and it's not a bad idea to do it sooner because it's truly not terribly expensive. I had a real estate guy recently tell me that he had been paying his accountants $100,000 a year to do various things, of which this was one of them, and that we were just a fraction of that cost, so he was going to outsource that end of it to us. So he has a lot of syndications where there might only be a handful of investors, but because he has a certain, let's call it critical mass of them, he's done probably 35 deals. So you get 35 deals times 5 or 10 investors, and now you're up in the hundreds. Does that help?
Thanks, Joan.
And you had a question too, I think?
I was intrigued by your cap, the cap 2 that you cap waterfall 2 or something.
Yep.
What exactly does it do? Are you able to manage a cap table?
Yes, I mean, basically, in the issuer portal, you can see your capital structure, but there's also a cap table waterfall modeling tool, so you can do, figure out dilution of rounds. So if you're considering raising another round, you can say, if I take in $1 million on these terms, then what happens? And so you can see what the dilution will be.
The question is, I thought that is it possible for you to control, given the fact that you're going to be getting a lot of investors,
Mm-hmm.
and you want a relatively clean cap table. Is that something that you should deal with?
I'm not sure I understand your question.
I mean, they have this, the idea that SPVs that they put in the middle, where, different investors would invest in that particular fund or SPV, and then the SPV
Oh, okay.
invests into the company, to the issuer.
If you're talking about, if I'm ABC Widget Company and I've done an offering of my Class A stock and 5 SPVs have invested in it, then in that structure on our books, you'd only see the 5 SPVs. And the subledger of each of the SPVs is something that can also be kept on our books, but it's not related to ABC Widget Company because each SPV is its own taxable entity and legal entity. So those are all separate. We actually have a subsidiary of Computershare. It's called Corporate Governance Services, and they have a software as a service tool called it's called GEMS, Global Entity Management Services. A lot of private equity, venture capital, and multinationals use it because it allows you to track the relationships. So it can actually draw you like an org chart. If I have ABC Widget and it has 10 individual investors and 5 SPVs, then you can track the relationship between the entities and what percentage each one owns and track the individual holders of each of the entities. Because that's all about the entity management. It's not a system of record or processing for transfer agency records, but it allows you to do that kind of relationship management. We use it internally. We use it for our contracts and vendor management because there's a lot of different roles and permissions. You can wall off what certain people can see. If you want to talk more about it, come see me. It's actually honestly, it's a kick-ass software tool. And I spent 9 years in technology, so I know a good one when I see one. Thanks, everyone.